The Fed just passed the $2.2 trillion stimulus bill to help the American worker and companies during this pandemic. I wanted to make a video specifically addressing the stimulus check, who gets the check, and some of the common questions people are asking. So that way you get all the facts. I'll also address the question that everybody keeps asking, will you have to pay back this stimulus check? I will also talk about how the stimulus check works and how you can potentially qualify even if you don't qualify with your 2018 or 19 income. So watch the video until the end to find out. Welcome back to my channel. My name is Min. I talk about personal finance, how to save money, and how to build wealth. If you haven't already, please hit the like button down below. Also consider subscribing. Let's get right into the video. So House Speaker Nancy Pelosi made some changes at the final hour of the bill. And there are actually a couple of meaningful changes that I'm going to address in this video. But first, let's talk about how large the checks are going to be and the income levels that you need to qualify. So the income levels haven't really changed other than the fact that now they've published the head of household. So in order to get the full amount, you need to make $75,000 or less if you're single. If you're filing head of household, you can make $112,500 or less. And if you're married, you can make $150,000 or less. And these income levels are based off your adjusted gross income. That means that that's income before your standard deduction or itemized deductions. I'll share with you some tips later on how to get your income down so you can qualify for the full amount. So if your income level was below those thresholds, then you get the full amount, which works out to be $1,200 per adult. On top of that, if you have any children under 17 that you're claiming as a dependent, you'll get an additional $500 per child. So for a typical family of 4, you would get $3,400. Now you're probably wondering about the phase out. The phase out is exactly the same as before. For every $100 above the threshold, you would subtract $5 from the $1,200 stimulus. So let's say your adjusted income was $75,100, you would get a check for $1,195. Let's say you were single and made $85,000, you would get a check for $700 because you were $10,000 over the threshold, which works out to be a $500 phase out. Now for the stimulus to phase out completely, if you're single, you can make up to $99,000. If you're head of household, you can make up to $136,500. And if you're married, you can make up to $198,000. Once you make any more than that in adjusted income, because of the phase out, you will get $0 for your stimulus check. Sorry guys. Now there is some good news. If you stick around till the end of the video, I actually will show you how you can reduce your adjusted income and it will actually benefit you long term. Now another thing also changed at the last minute, and that has to do with low earners. So if you are a low earner of income, you actually qualify for the full amount now. Prior in the old bill that was proposed, you would only get about $600 or only get a maximum of the tax amount that you paid. But now that is all gone. As long as you make under the thresholds that I mentioned earlier, you're gonna get the full $1,200 per adult and $500 per child. Now another thing that changed also is the fact that you can actually qualify if you made Social Security income or disability income. Now if you're retired, you actually can use your Social Security to qualify for this credit. You actually don't even need to file a tax return. The IRS already has your information on your form 1099-SA, and so they know exactly how much you got for your retirement income, and they will send you those checks if you meet the thresholds that I talked about earlier. And similarly, those receiving Social Security benefits or SSI benefits, you will also qualify for this credit as well. And specifically what changed in the bill regarding this is the fact that in the earlier versions of the bill, you would have to have earned income to qualify for this credit. They no longer require earned income. So you can have Social Security income or disability income. Now some of you guys probably owe the IRS money and maybe you haven't paid all of your taxes. And you're probably wondering, are they gonna take your stimulus check from you? And the answer is no. The stimulus check is completely separate from wage garnishment. And they actually can't even garnish your wages during times like this. So make sure that they're not taking money from your paycheck if you're getting a paycheck. But you will still get your stimulus check if you owe the IRS money. Another question I see often is, what do you do to get this check? Do you need to file something? And the answer is no. The IRS will actually use your 2019 tax return or your 2018 tax return if you haven't filed for 2019 because of the extension. And let's say you were using direct deposit through TurboTax or H&R Block, then they already have your information and they're gonna do a direct deposit right into your account. Another question that's asked is the check or stimulus check taxable? And the answer is no. The stimulus check is actually a tax credit, and so they will not tax you on this money. And then when will you get this check? Well, in the bill, it actually says as rapidly as possible. And it doesn't really specify a date, but most likely at the earliest, you could probably expect something in April. If not, then early May. But one thing that we know is true is if you have direct deposit on your 2018 or 2019 tax return, then you're most likely gonna get it faster than those people that are getting it by check. And the last question is, will you have to pay the stimulus check back? I see a lot of misinformation out there. I've even given misinformation because of the late changes that were happening in the bill. And the answer is, for the most part, you probably won't have to pay it back. but there is a case that some of you will have to pay it back. Let me explain. The stimulus checks that they're giving people in April is actually a 2020 tax credit that the IRS is advancing to you in light of this pandemic. I know that was a mouthful and it took me a couple times to actually say that whole sentence in one shot, but what that means is because the IRS does not know what your income is in 2020 and they don't know what your family situation is in 2020, they have to go back and look at your 2019 taxes, or if you haven't filed, your 2018 taxes to determine if you qualify for the stimulus. Now, the whole point of the stimulus is to get money in the hands of Americans today, so there's no way they can wait until the end of the year for you to file your taxes to give you that money. And so that's why they use your old tax returns to determine if you actually qualified for the credits. So you're probably wondering, what's the big deal? Just tell me already. Well, remember how I said this was a 2020 tax credit that they're advancing to you? Well, that means that all those income thresholds and all those children that you have are actually based off the 2020 year and not the 2018 or 2019 they used to qualify you for the April check. So that means that if some of you guys are making more money in 2020 and you guys go over that income threshold in 2020 and you guys took a check in April, you may have to pay it back when you file your 2020 taxes. So let me give you an example. Let's say you were single and you made $75,000 in 2019 and you filed your taxes and everything was fine. Your adjusted income was under the $75,000. You would get a stimulus check for $1,200 and you would be a happy camper. Now, let's say in 2020, you were one of those people that were actually working really hard during this pandemic. You were making a ton of overtime. You even got a bonus, you got hazard pay, you got all these things, whatever it is. And let's say you made over $100,000 in 2020 by the end of the year when all is said and done. Well, when you file your 2020 taxes, all of a sudden your adjusted gross income is now over $100,000 and you got a $1,200 stimulus back in April. And so technically you didn't qualify for that tax credit. And so you potentially might have to pay that $1,200 back. It's not really clear in the bill what actually happens in this case. We'll have to wait and see. But most likely you're gonna owe $1,200 or they're gonna deduct $1,200 from your refund if you have a refund. So you're probably not gonna be happy if that happens to you when you file your 2020 taxes next year. Now, the IRS doesn't really let you opt out of getting that April check, so it's really unclear what's going to happen. I don't really think they're going to make the American people pay back this $1,200 stimulus if they mistakenly gave it to them. We'll just have to wait and see. Now, the good news is there's a flip side to this, and the opposite is also true. Let me explain why this might be good news for some of you out there that are making less money in 2020 than you were in 2018 or 2019. If you were one of those poor souls that made too much money in 2018 or 2019 and didn't qualify for a stimulus in April and you suddenly lost your job in 2020, it doesn't seem fair that you wouldn't qualify for the stimulus. Well, because of the fact that this is a 2020 tax credit, you actually might still qualify. The only difference is you're not going to get it in April, you'll get it when you file your taxes in 2020 next year. Remember how I told you that the IRS is going to be looking and comparing what they gave you versus what you actually deserve? So in 2020, when you file your taxes, that's actually when they're going to be determining the full amount of your tax credit. Wait, what? I qualify for the stimulus? Now, you won't be celebrating in April like the rest of America. Just know that you might still qualify if your adjusted income for 2020 is below those thresholds. And another good thing about this is the fact that in 2020, a lot of babies may be born. You might actually get another $500 if you had another baby in 2020. So that's actually why they did it this way. Because the IRS does not know your situation in 2020, they're going to be doing what's called a true up when you actually file your 2020 taxes. That means that you might actually get more, and for some of you that actually made more in 2020, you might actually owe them. This was exactly my situation. In 2020, I left my corporate job, as some of you already know, and so that means that my family's income is well below that $150,000 now. That means that for me and my wife and my 3 kids, we're going to be getting $3,900 if our adjusted income is below $150,000. We just have to wait and file our taxes to get that amount. Now, that could change if you guys smash that like button and share this video with your friends. You guys could skyrocket my channel. Who knows? Maybe I won't qualify. I'll be fine either way, guys. Now I wanted to share with you guys a couple tactics to get your adjusted income below that number. Let's say you were in a situation where you're going to potentially make more in 2020, which puts your adjusted gross income well above that $75,000 or the other numbers that I mentioned for head of household or married. Let's say you were making $100,000. Well, there's a couple of ways you can reduce your adjusted gross income. The first way is to actually contribute to your retirement account. If you have a 401k at your work, you can actually put in $19,500 for the 2020 tax year. That means that can reduce your income almost to $80,000 just by doing that. And then if your company has a health savings account and you have a health savings plan, you can actually put in another $3,550 for the 2020 tax year. That effectively reduces your income by over $23,000. That means that your adjusted gross income is now $77,000. That means that your phase out would be only $100 and you would get a tax credit of $1,100. Not only is that tax credit sweet, you also get to contribute to your retirement account and your health savings account, which can also be a retirement account as well. That is a super easy way to get your adjusted gross income down so you can qualify for the full tax credit. And if you have qualifying children, then that is a no-brainer to do. You want to make sure that you're under that threshold so that way you qualify for the children as well. Now, some of you are probably sad that you have to wait until next year to actually claim this stimulus, but actually you can actually get some of that right now through your payroll. If you know you're going to get a certain amount, let's say in my case I'm getting $3,900, you can actually go and adjust your W-4 and just pay $300 less every paycheck. And so you can actually get it right now if you actually just go and adjust your W-4. You can check out my other video on how to do that. Remember, you don't want to have a tax refund at the end of the year. And so you can actually do this by just adjusting your W-4 and having them withhold less money every paycheck. So there you have it, guys. That's the question that everybody seems to be asking and not getting a clear answer on. Hopefully this video was helpful in answering some of the other questions as well. Let me know if you guys have any more questions down in the comments below. Make sure you hit that like button if you haven't already. It really helps my channel out a lot. And if you think this video is helpful, please share it with some of your friends and family. I'm sure they have a lot of questions and probably don't know all the answers. And also, if you like content like this, consider subscribing to my channel. And as always, guys, have a nice day out there and be safe.